Okay, hi traders, here's a new video. First of all, a risk warning, your invested capital may be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another candlestick chart analysis video. There are only a few which I have to do. And that is for how I show you how I trade and how I choose my trading setup, which kind of trades I try to avoid, and how I decide to enter into a trade. And let's look at this here. I'm expecting that price will go down further. I'm expecting that this candlestick will close a little bit, or I'm waiting for this. Yes, you see we are going out. I was waiting that this candlestick will get a little bit higher. Then I would enter into a trade. Yes, I wait that this candlestick is going higher, and if it's going higher, I will enter. Okay, I'm going to enter as for the rejection. So I'm expecting that there will follow now the breakout, and that's the reason why I entered into a put here, because I'm expecting that in the next 45 seconds the price will go down further, because we got here a Bollinger Squeeze after this fake breakout of the 50 EMA. Yes, and now I'm expecting that we get a breakout. All those things which I'm explaining here are based on those things which I have explained in my ebook. Get this ebook, it's for free. You'll find the link in the description. And this ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, and those concepts which can be used also for Forex and digital options. Get this ebook, it's for free. You'll find the link in the description. And the most important part of this ebook is this part about the rejection. That is this one, yes, but you have to understand all concepts to understand everything, each and everything. So let me see what I want to show you. Yes, I want to show you this part here, because that is the most important if you're doing your trades based on those things which I have explained in this video, where I'm telling you about the trend, the key level, the candlestick pattern, and the rejection. You have almost 80% success rate, and that is a really good thing, so you can do your trades easily. So let me see. That was in the money. You see, we got here this breakout like I had expected this, yes, and I traded this breakout through this after this kind of scenario here. And now I'm going to show you some of those trades which I would do. So let me see. I would do, for example, this trade here. I would enter after this fake breakout, yes. I would wait, because that is the railway tracks. The railway tracks fake breakout, yes, I have explained this also in the ebook. This is one of the most difficult to breakouts to understand and to recognize and to notice, yes. But after such a railway track breakout, and to see here we have still a downtrend. You see the EMAs, how they are lined, yes, also the 20. You can expect after a rejection from this key level, you see the trend is down, rejection from the key level, yes, the candlestick pattern, yes, that is this one here. Those two together are candlestick mass, is nothing else than a doji, yes, because that is the opening price, that is the closing price, so you get here a doji, yes, that is a gravestone doji, yes. And that's it, yes. And then you can expect on the rejection here from the 50 that it will be in the money, it will be a put. So then here in this scenario, I would not do any trade, because it's everything looking here a little bit bad. You see here a lot of consolidation area, for example here with this dojis here, and here this kind of area. That is not so funny, so I would not do any trades here, because here you get trapped, yes, and you have to wait till price gonna break out of the boxes, yes. Here this box, for example, and almost here also this box, yes. So that is where you can enter, and you see okay, you could do this kind of trade here, but this would be a little bit risky, because you see already that there's coming here together the Bollinger Squeeze. But you could do this trade here after this hammer here, bearish hammer, Yes, that would be almost a good trade too. Yes, also if it's at the beginning of the consolidation area. Yes, that is important that you understand this. So you have to get at least a rejection. Yes, to understand that this will unfold, because mostly then you got out of the money. So that was this one. Let me see if I can show you some more of those trades which I would do. Yes, based on those things which I have explained over and over again in the last video. So here in this area I would mostly not do any kind of trade, because you see how tricky it is. You get here an engulfing candle, but the next candle is one which would you go out of the money. Yes, this would put you out of the money, and here you get another engulfing candle, and that is what you have to do. You have to understand. Yes, you have to understand and watch in the past if such candlesticks and such things worked out. And if they didn't work out in the past, you have to be much more carefully when they will appear actual on your chart. Yes. So if I see something like this before, yes, where this doesn't work, I will probably not enter into some kind of engulfing candle, yes, after sorry, after such kind of scenario, yes, because I would see that there is, and here you would have 1 hour, yes, without any good trade, yes. The only one which could be done would be maybe this Marubozu trade here, yes, but after this Marubozu candle, this candle here, yes, but you should be really carefully that it will break through the 200 really, but the 200 is really flat, so this would be a good trade here too. Yes, this continuation trade of Marubozu, which I have explained also in the ebook. So let me see if I can show you some more. Here we got, okay, I will do this in this case. Let me see what we have here. So here I would do this kind of scenario here, because here we have a tweezers bottom in combination with engulfing candle, yes, and a nice rocket candle here. This is a nice rocket candle, so I would enter into this kind of trade here, because we have here an uptrend, yes. The major trend is up, because you see the EMAs are aligned in this direction. And so you can expect that after this downtrend here, yes, we get now a reversal. And you see in the last hour there was no trades, and here you would have immediately 2 trades, maybe 3 trades, because I would do also this kind of trade here. Yes, after the breaking through the 20 EMA, I would enter into this trade here on the rejection from above to below. Yes, because that downtrend would continue, and I would enter also in this kind of trade here after this hammer here, which would tell me the downtrend will continue too. Yes, and then I would enter obviously in this kind of trade after the reversal from this uptrend. And so you would do in this kind of scenario here in 15 minutes or in half an hour at least five trades. Yes, and in the previous hour where the market was really bad, you would do not even one. Yes, because it was not looking good there. Yes, and also this kind of scenario here is if you're doing here some kind of line, you see it's broke through this area, got a pullback here, yes, but everything is not so clear, because we have here ranging market too. That's a major trend here is ranging. You see how flat the Bollinger Bands is. Yes, that is the tricky part. We have a minor trend here, a minor downtrend, and here a minor uptrend, but the overall trend is flat, and that is not so good, because here can happen everything. It is not clear if there will be a reversal. You have to wait for such kind of candlestick patterns, engulfing candles, yes, to understand what is going to happen next. Yes, that is the part here. I would do this kind of trade, this put here, yes, on the rejection from this candle here, from this area. That would be also a trade which I would do before it starts then to get a little bit too strange, and that would this one. So let me see if I can show you here something. Here we have a steady uptrend, which is looking not so nice that I would say here is any kind of good trade. Maybe here would be this kind of trade. But this without any kind of rejection, but because price tries almost to range around the or fake breakout of the 200 EMA, I would probably do this kind of candle trade. Yes, after these two candles, which are nothing else than here. This is the opening price. Yes, this is the closing price. So we get here again a doji, a long leg doji. So you could enter into this trade if you see a large movement, because this candlestick on the halfway of this candles, you could enter here in this halfway, because this candlestick would go mostly over the highest high of this candle. Yes, so then I would do here no trades, because you see here this kind of engulfing candle doesn't work out. This dark cloud cover worked out. Yes, it's not so sure. So, and here we have a consolidation area. Here it's again something like a consolidation area. So here in this kind of market, I would not do a trade. You see also the EMAs are all close together. Yes, and the 200 EMA is flat. And that is the reason why this is not working out, because the 200 EMA is flat. And that is the reason why price tries to range around it. Yes, so that was this one. Let me see if I can show you another one here. And here, let me see what we have here. We have here also some kind of consolidation area here. Yes, that is a consolidation area which I would try to avoid. Yes, then I would enter probably in this kind of trade here, because this candle here is telling me that we are heading down. Yes, but only because it broke the 100 EMA, and we have the 200 EMA here below. And you see here also price tries to range around it. Yes, around the 200 EMA always. And that is the tricky part. You have to be carefully when you have such kind of scenario. When the 200 EMA is flat, price will try almost to range around it. And if not, you have to be carefully. So then I would enter into this kind of trade, because here I would understand that the 200 EMA is a neckline. Yes, it's a neckline of this double bottom here. Yes, this is a double bottom. You can see it. It's not a really nice one, but this is a double bottom. So I would enter into this kind of trade here after this candle broke through the 200 EMA. So, and then I would probably not doing any kind of trade. You see how risky it is. So that is the reason why it's important to get a rejection. Because if you enter into a kind after this engulfing candle into a trade, you will get mostly out of the money. But that is the reason of the EMAs. That is what I'm telling you. If you have flat EMAs and crossing EMAs like here, you have to be carefully, because if they are crossing, if they are flat, price will mostly reject from it. So you can only do your trades based on this kind of scenario here, at the edges of the Bollinger Band. Yes, at the edges of the Bollinger Band, because they are mostly those safe things, the safe parts. Yes, because here in the center, you don't know when this candle will reject or will break through. That is not clear, and that is the risky part. So I would do mostly also this kind of trade. Yes, because here we have a bullish harami, and bullish harami is a really strong reversal pattern. Yes, so I would enter into this kind of trade immediately without any kind of rejection. Yes, you can do also some that was this one. Yes, and that I think that would be every kind of trades which I would do here, because you see here consolidation area where the EMAs are flat and crossing, consolidation area here, and also a little consolidation area here at 1 deviation. The only parts where you can do the trades is here at the edges if you have flat EMAs. So I would say that was enough. I have shown you some insights about this kind of trading. Here, this kind of wicks here, I would try to avoid. You see, we are still in a downtrend, yes, but we are going, the trend is stalling. We are getting now here between the 250 EMA and the 20 EMA. And price doesn't know right what is happening, so I would try to avoid any kind of trade till I would not see any kind of a hammer or something like this, because you see here starting again a consolidation area between the 50 and the 20 EMA. So if you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, let me there a comment or join the Facebook group. I would say stay safe and bye-bye.